I want to, before we get into the network state, there's another part of this thread that we need to bring together. So we understand where crypto fits into this. The other thread is the evolution of the internet itself and how it's allowed people to coalesce in communities, transnational borders, because those two ideas come together into the network state. So
hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto after weeks of experiencing fear, doubt, and uncertainty due to various short-term challenges, particularly the situation in Germany. The government is planning to sell 50,000 Bitcoin. The cryptocurrency market has successfully achieved the long-awaited recovery, and we are once again heading towards higher prices for Bitcoin and other cryptocurrencies. The recovery is driven in part by the impressive performance of the spot Bitcoin ETFs. According to data from Farside Investors, US spot Bitcoin ETFs experienced significant inflows of $422.2 million on Tuesday, marking the highest peak recorded in July. BlackRock's IBIT had the highest inflows of $26.2 million, while Fidelity's FBTC R21 shares RRKB and VanEck HODL had inflows of $61.1 million, $29.8 million, and $22 million respectively in the 3 trading days ending on Tuesday. This indicates a very bullish sign for the spot Bitcoin ETFs and the underlying cryptocurrency, as over $1 billion in inflows were attracted. This information was shared on Twitter on Tuesday. Bloomberg ETF analyst Eric Balchunas provided an update on the ETFs, highlighting their impressive performance that has surpassed his initial expectations within just 6 months. This post highlights the progress of Bitcoin ETFs, which have taken 2 steps forward after a setback in June. Yesterday, they gained an additional $300 million, contributing to a weekly total of $1 billion. This brings the year-to-date net total to a significant amount. The most significant figure in all of this has surpassed $16 billion for the first time. Our initial estimate for the first 12 months was between $12 to $15 billion, and we have already exceeded that with 6 months remaining. Eric anticipates a surge in investments in ETFs in the near future as the cryptocurrency market and global liquidity conditions become more intriguing. Raoul Pal, the founder and CEO of Real Vision, shares similar views. Particularly regarding global liquidity conditions, Raoul believes that when these conditions shift, asset prices will respond immediately. He predicts significant price increases across all assets, although he expects even more substantial growth in the cryptocurrency market. Pal describes cryptocurrencies as the frontrunners in the race, projecting that the overall market cap will quadruple from less than $2.5 trillion to $12 to $15 trillion by late 2025. This would result in a considerable price increase for cryptocurrencies such as Bitcoin, Ethereum, and Solana, and lots of things Raoul Pal discusses, so please watch the video to end. And share this video, and subscribe our channel Everyday Finance. Thanks.
don't forget, I live in a country that is built on exactly this premise. So the Cayman Islands premise is tax neutrality. It's not like in this day and age, you don't get to evade taxes, right? Because everything gets reported, right. But it's tax neutrality. But the idea is you've created a good enough regulatory system that has the English rule of law that ends up going to the Privy Council. Therefore, you've got legal redress. And therefore, what happens is companies around the world will look for where is the jurisdiction that gives them the right regulatory framework with the right protection, but not too much.
Right.
And it works phenomenally well. So you can choose to set up your business in Cayman, the US, Singapore, Europe, and you'll make that choice.
That's right. And so, once we think about it this way, right, actually some of the most profitable companies and countries out there are effectively vendors of regulatory services. Harmonization is starting to break up, right? So that huge 20th century arc of the US where it basically ruled huge parts of the world is starting to actually break apart, and countries are starting to break away. You can do some stem cell stuff in Germany, and there's some drone stuff in parts of the world. There's self-driving cars in Singapore, and financial innovation in places like Dubai or Singapore, right? And Cayman. And so the US regulatory thing is starting to break up. And I think in the fullness of time, as I mentioned, what the financial crisis was in terms of like sort of bootstrapping Satoshi and crypto, COVID will be that in terms of like bootstrapping the exit of the FDA and the CDC and so on, right? Okay, putting it all together, why is crypto an enabling technology for this? Having thought about this stuff for a long time, is because it is, quote, the exit, okay? For example, at a stroke, rather than going and trying to figure out, like, let me modify subpart F of Schedule D on Law X, or, people could spend like their entire lives just trying to get in one modification. And then what does it come down to? It's like some senator's mood on the morning, whether they had coffee and they slip in a clause into a 1,100-page omnibus bill. Like, that's how legislation is made in the United States. It's like, this, could you imagine, like, if you're an engineer pushing 1,100 pages of new code without testing it to the entire code base that affects 300, it's like, at the last minute with 500 people adversarially coding it. It's like the stupidest possible thing. We will honestly look at this system like we looked at the Middle Age monks or whatever, I don't know, Christian flagellants. Just think of the craziest antiquated, it's like the indulgence system of the Catholic Church, crazy systems that don't make any sense for like future peoples. This is what that system is. Okay. What's the alternative then? What's the alternative to that? Well, can you get actually a new zone, right? Can you get a new space that's bare of law, right? That's just all the people who are there have now come to this new space and opted in to be bound by the rules of those who came before. Just like, for example, someone sets up a server. Okay, they have a piece of digital land, a domain, and the people who come there, hey, the first guy there set up the service and he's the system administrator, and then people come there, he might hire more folks, and then it becomes reddit.com where whatever billion people are there, or it becomes the Ethereum blockchain, right? One person sets it up. They, crucially, when they make those electrons dance, when they have that little spot of cyberspace, they are taking nothing from anybody. Nobody cared about it before then. It's provable that there's no value there, right? They truly did create something from nothing because they just twiddled some electrons. They made a more pleasing configuration of electrons, and other people were attracted to that glow, and they all migrated there, right? And can we replicate that? Because that's a frontier spirit, fundamentally. It's like getting a piece of free land and being able to build on it. We have a digital frontier. Can we actually use that digital frontier to create a physical frontier? This is really the fundamental thing. And when people say, crypto is about illegal things, so on, one way of thinking about it is portraying it as, when the Puritans left England or the UK to come to the US, they were looking for something where they could do things that were illegal in the United Kingdom, right? In the sense of they wanted a new community that was independent of this jealous government. Right. And
yeah, I've always called it a parallel financial ecosystem.
That's right.
So it is parallel, but not constricted by the same issues that we have with the current system.
That's right. And so the thing is that when we had territory in the world that wasn't completely claimed, or that, before the modern, cased in iron, concrete nation state system, you could get physical separation to get social separation, right? When they went overseas, practically speaking, it was harder to be ruled, right? And now today, when every inch of Earth is spoken for and satellites track everything and the slightest border thing is like a war or whatever, right? How could you possibly get a zone of freedom? So I actually have an answer to that, and that's what this book is about, the network state.
I want to, before we get into the network state, there's another part of this thread that we need to bring together. So we understand where crypto fits into this. The other thread is the evolution of the internet itself, and how it's allowed people to coalesce in communities, transnational borders, because those two ideas come together into the network state. So let's go through your understanding of the internet, the evolution, and what it enabled in a way that was different to the nation state, because it's something, again, I've been talking about for a long time. I think it's really important.
Absolutely. I'm going to sum up the previous thing and then
Bitcoin may potentially reach the $71,000 mark after surpassing the $65,000 price point on Tuesday. Based on historical patterns observed by traders, the recent price rebound has sparked increased interest among future traders who are speculating on Bitcoin's short-term price movements. According to a post by a crypto trader, if the price of Bitcoin breaks $65,000, it could potentially reach the $71,500 level. This has happened 4 times already this year. However, there are a significant number of short positions at risk of being liquidated at $71,500, indicating that many traders don't believe the price will reach that level in the near future. CoinGlass data suggests that approximately $1.47 billion in short positions will be wiped at $71,500. Despite this, there has been a recent increase in confidence among traders, as the open interest in Bitcoin options contracts has spiked by 133% in the past 5 days. Let's back to the Raoul Pal interview.
I've even, interesting enough, I've even talked about cryptos and Web3, this whole the whole space as the discovery of the Americans. It is, I think it's new GDP as well. It's not recycling of GDP, it's entirely new GDP. For example, world GDP changed significantly as America became part of the globe.
That's right. And actually, so now that gets to the second thing, which is, I think we can actually make that analogy even more than an analogy, like a mathematical analogy, okay? And let me, I'll just throw some stuff. So you talked about the internet, right? One thing I talk about in the book, and I'm going to actually significantly expand this chapter with some visuals and code and what have you. 1890, the American frontier closed. 1991, it reopened because the NSF Foundation, National Science Foundation rather, repealed the so-called acceptable use policy. Do you know what that was? So that actually banned commercial traffic on the internet. Why? You're like, that seems weird. I mean, like we think of the internet as synonymous with .com, right? What the heck, right? So what the AUP was something, because the internet started as like a military and academic and government network, right? And it was originally set up to like have communication systems that would survive a nuclear attack. That's foreshadowing. That's Chekhov's gun. Let's come back to that in a later question, okay? So the internet was set up to survive a nuclear attack, okay? So it was this military academic thing, and they didn't want commercial traffic because they said, look, that's going to get us spam, and it's going to get us porn and malware and all this like stuff. And you know what? They were completely right. All that stuff did happen, okay? But we got enough benefit to offset that cost and more than that. I think that's fair to say, right? That's like literally all the economic growth of the last, whatever, 20 years is thanks to the internet. So that's like the reopening of the frontier, because you could register a domain name. That's really what it boiled down to. You could register, the free land existed. You could build from scratch. And think about how ridiculously important this is.
So it wasn't a government-controlled land, it became a publicly available land.
The potential effects of Mt. Gox's repayments on Bitcoin are still being overestimated and may be used by whales to make informed decisions. In a post on July 16th, the CEO of crypto coin company CA Youngju stated that the impact of selling a significant amount of BTC, ranging from $3 billion to $9 billion, is insignificant compared to the overall increase in Bitcoin's market capitalization in the past 18 months. Even if GX's $3 billion is sold on Kren, it would only account for 1% of the realized capital increase in this bullish cycle. This demonstrates manageable liquidity. Furthermore, he pointed out that the price of Bitcoin was highly susceptible to speculative fear, uncertainty, and doubt, as well as unforeseen negative events. The impact of fundamental selling activity, on the other hand, was relatively less significant. Kai mentioned that while some investors were engaging in panic selling, there were others who were consistently increasing their investments. According to a post on July 10th, it was revealed that there was a significant increase in the number of permanent holders of Bitcoin. These holders, who have large individual custodial wallets and have not made any withdrawals, accumulated a total of 85,000 BTC in the last 30 days. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.